Monday blues have us all feeling a little gloomy, but the crypto market is having a total meltdown. In the last 24 hours, the global market cap is down by 0.83%. Is it time to pull our crypto investments and kiss the digital currency world goodbye? In this video, we'll be talking about how Bitcoin and crypto slip amid signs of exhaustion, while BTC and ETH see investment inflows again. First off, we were just starting to get optimistic. Everyone knows the crypto market has had a rough couple of months. In fact, many investors have already given up on digital currencies and pulled their money. But for the few that still have high hopes in Elon Musk's futuristic vision for crypto, things are starting to get even more difficult. New beginnings are supposed to be good, right? Unfortunately, this isn't the case with crypto. On the 1st of August, the largest cryptocurrency, Bitcoin, dropped as much as 3.6%. Now, this downfall came after a good weekend. And get this, Bitcoin was breaking above $24,000 over the weekend before hitting rock bottom again at $22,958. The 27% gain might have been short-lived, but July was the best month for crypto since last October. Unfortunately, Ethereum slipped as well after its huge 70% jump in July. That was the best value it's been at since January 2021. Traders barely let out a sigh of relief before seeing that August is about to be more stomach-churning for Bitcoin. Further bouts are predicted with guaranteed volatility. Still, Antony Trenchev, co-founder of crypto lender Nexo, seemed to be maintaining his positive vibes. He said the market's leading towards a rerun of July's resilience instead of June's losses. He said Bitcoin just absorbed a huge macro punch last week because of the Federal Reserve rate hike, nothing else. At least traders haven't lost faith in the currency yet. Next up, what happened in June and July? If you haven't been keeping up with the latest crypto news, then allow us to take you on a quick trip down memory lane. In late June and early July, Bitcoin fell below $20,000. We're blaming that on concerns about interest rate hikes and high inflation, but that's not all. Traders have been seeing internal issues with cryptocurrencies for a while now, such as the Terra Luna ecosystem collapsing in front of their eyes and hedge fund Three Arrows Capital. When things like that keep happening, nobody wants to spend thousands of dollars on crypto. In fact, even the ones who already invested start pulling out as soon as they can. Let's take you a little further down memory lane. In November 2021, Bitcoin used to be at a whopping record high of $69,000. Even though it's just been a constant downfall since then, we finally show some strength lately. In July, traders got quite the news when the S&P 500 gained 9%. What everyone needs to understand is that crypto and equities are positively correlated to each other, and that's even more true for the mega caps. Solid earnings results from big cap tech firms are what lifted the cryptocurrencies a little higher, and investors are hoping to witness more of that in the future. Turns out there were some super illiquid market conditions. Don't believe us? Take the word of Ed Hindi, a chief investment officer at Tier Capital. He said the next strong technical points for Bitcoin and Ethereum were supposed to be $24,400 and $1,750 respectively. That would have been the ideal case, and both currencies would have been able to break through. Unfortunately, what we just experienced was a quiet weekend with some extremely illiquid market conditions. Hindi said that the market tried to go through to these rates, but couldn't because there wasn't any liquidity to fall back on. But hey, Hindi also said the weekend activity isn't relevant at all, even though he predicted that the drops might be reversed on Monday when the bulk of volumes enter the market again. That hasn't quite happened yet. But you know what they say, if you don't get it the first time, try again. Now, let's talk numbers. Listen closely for this one. Did you notice we were keeping you away from the numbers? Nope, we were just saving them for later. Now, let's hear the big rundown. Bitcoin's down by 1.37% and is currently trading at a value of $23,405. Things are also looking bleak for Ethereum, with a slight downtrend and being traded at $1,690. Now, the USDT Tether had a very small positive change in value. This stablecoin is trading at its peg of $1, and yeah, that's not too impressive either. The USDC stablecoins had a similar minimal positive change of 0.02%, but the BNB token suffered loss with a fall of 0.75%. Were you rooting for Ripple? Well, that just had a downtrend of 2.02%. Binance USD stablecoin had some good luck during all of this chaos, and it rose about 0.14%. The only other stablecoin that experienced an upward trend is DAI, but that's just by 0.01%. So all in all, the majority of top tokens slipped from their positions in the past 24 hours. The downtrend was spread throughout the market, but the global market cap is still above $1 trillion. So, what's keeping Bitcoin from slipping further below? We already know that the price of Bitcoin and other popular cryptocurrencies fell because people heard the Federal Reserve is about to raise the key interest rate by 0.75%. If they were about to give us the highest increase in over 30 years, of course, people started pulling out from crypto investments. But now, we've reached a turning point for Bitcoin. If the currency leaves the stabilizing area now, it might drop right back to below $20,000. Right now, the only things preventing Bitcoin from going down to the $19,000 level are the 200 WMA support line and price range. If we don't want to see the price of Bitcoin return to that horrifying level from 2 weeks ago, then it needs short-term support zones. If not, then all we see in the future is BTC plunging into the abyss again. But hey, there's also some good news. Some technical analysts did show that Bitcoin's hold on the $22,000 value is slipping. In fact, inflow statistics and trading volumes are still rising. That could only mean one thing: the bulls will keep supporting the coin. We can only be grateful that recent news headlines didn't create any more turmoil in the crypto market. Tesla announced selling 75% of its Bitcoin holdings, and the European Central Bank just had a rapid rate hike. Despite these uncertain financial conditions, Bitcoin was able to maintain its place. Still, large retail and institutional investors aren't ready to put their money into crypto just yet, so Bitcoin needs to hold on for a little longer. If it can consolidate at local support levels, then BTC can go further to show the market a more stable rally very soon. And now for some other crypto news. First up, Celsius just crashed and people are begging to get their money back. Celsius and its CEO Alex Mashinsky sold the platform to traders by calling it a safe place. Little did the investors know that they'd be filing for bankruptcy soon. When the entire crypto market plummeted, Celsius had some huge troubles and froze withdrawals in mid-June. Right now, the company owes over $4.7 billion to users. And get this, nobody knows what the end game is. As for those clients who suffered major losses, they've been posting letters to a public online court docket. From a single mother in Texas struggling to pay overdue bills to a regular teacher in India who put all his money into Celsius, every client is feeling angry, depressed, and betrayed. As of now, Celsius hasn't replied to the client's letters. Even if they do, how the heck are they going to give back all the money they owe? Next up, DeFi tokens are the top gainers right now. While the wider crypto market goes down in shambles, some blue-chip decentralized finance tokens have been doing particularly well. CRV, a governance token of the DeFi curve, is up by 15.58% in the past 24 hours. In fact, that's a month's highest. CRV is the 62nd largest cryptocurrency right now, with a market cap of over $770 million. And if that wasn't enough, then LDO, the native token of Lido Finance, has also experienced an upward trend of 11.1%. At the moment, it's trading at $2.24. Across the market, it looks like DeFi tokens have had a good weekend overall. That includes Maker, Synthetics, and 1inch too. And lastly, IMF just issued a huge warning to all crypto traders. If the Bitcoin price falling from almost $70,000 to $20,000 didn't serve as a warning to you, then the IMF has something to say. Even though Bitcoin's recovering little by little, the recession fears spread by the Federal Reserve are still real. Now, as big coins like Bitcoin and Ethereum try to survive the shockwaves from the Terra USD stablecoin collapse, there's a new earthquake coming. We're not very sure why, but the International Monetary Fund just warned there are others that could fail. Is this our cue to stop betting on crypto? Guess we'll have to wait and see. And that's a wrap for this video. What do you think about Bitcoin's downward trend this weekend? Do you think the global crypto market could survive? Let us know in the comments below. Before you head out, don't forget to give this video a thumbs up and subscribe to our channel for more awesome updates like this. See you next time.